we are in conversation with the CEO of the company, Mr. Surendran Chemmenkotil. Mr. Chemmenkotil, morning. Thank you so much for joining in. My first question then is to do with the top line growth. How have things panned out in the first quarter, and to what extent has the pricing change played a part when it comes to, the number that we've reported on the top line this quarter?
All right. Good morning, Agam, and good morning, Vasha, and good morning to all your viewers. At Metropolis, of course, we have had a good and a strong quarter one on the back of a good quarter on quarter four, the exit of last year. The revenue, we did 13.1% year-on-year growth in the quarter one. This is coming on the back of patient volume growth of about 7% and also realization going up by about 6%. Out of the realization 6%, about 2.5%, 3% is coming because of price increase, and rest, the revenue per patient growth is coming purely on the basis of the better mix on True Health and the specialty. So overall, 13.1% growth on revenue and 21.2% growth on our EBITDA and 31.3% growth on our margin. So overall, we have had an excellent quarter, in quarter one.
Well, I wanted to discuss about True Health, which contributes almost 17% of revenue, and specialty, which contributes 37%. Now, both are growing strongly. Now, how do you see this trend continuing, and also where do you aim to take this contribution to?
Yeah. So True Health is basically the wellness and illness bundling packages, right? So the last few quarters, we have been really working hard to enhance this portfolio by giving the better health options to the consumers and also better commercials, right? And these are coming on the back of a curated packages, and been driven through all the channels, including the digital channels. We are seeing significant growth, 28% year-on-year growth, and now it's become 17% of our overall portfolio. And I keep seeing this going up. I think there is a good demand and good understanding in the market about these products, as bundling products are really helping. So I keep seeing this getting better with every coming quarter. And specialty segment, as you know, is the core of Metropolis. We are basically a specialty brand, and this is coming on the back of doctor endorsement. Our sales team in the regions, they go and meet up with the doctors, and we keep telling them about how our tests can help them, better their diagnosis for the diseases of the patients. So that segment is also doing well. 37% is currently the overall contribution to the business. And as we go forward, we will see this getting better and better.
Sorry, go on.
So this 17% of True Health and 37% of specialty, where do you want to take this contribution to, maybe in next 2 years?
Well, see, I don't want to put a specific number to it. Over the last 1 year, we moved it up by 3%. And in the last couple of quarters, we have seen the trajectory getting further better, right? So this could move, 4, 5, 6% in the next, 12 to 18 months time. I mean, we are putting all efforts to get there, but telling specifically about where it will be in 1 year, 2 year time, relatively difficult, but there is enough headroom on this particular segment.
Right, so if you could also give us an idea about the kind of traction that you're expecting from the new markets that you have entered. In comparison, what kind of growth can we expect from mature markets going forward here?
Yeah. So if you see that, the tier 3 markets that we have entered in the last, couple of years is now contributing to almost, 23% of the revenues are coming from tier 3 markets. And the tier 3 markets are growing by about 18%, which clearly talks about the potential available in the tier 3 markets. See, what we are seeing is as we go and put up new labs, new centers in the tier 3 towns, where basically there is a supply deficiency in terms of good quality of diagnosis. So wherever we are putting new labs and centers, we are seeing good traction in the beginning, right? And as we can further strengthen it, we moved up from 300 to 650 towns in the last 18 months. And these 300 towns that we added can further strengthen in terms of test volumes. So that's clearly a growth that can be expected from there. And also we plan to take it up, the number of towns that we operate from current 650 to maybe a 1,000 number in the next 18 months time. So those markets will definitely do well because there is a supply challenges at this point of time. And the core market, the strong market with the top 10, 12 cities, currently contribute to around 70% of our revenue. And we keep seeing as and more we do on specialty and true health, etc. Now we find that these markets also growing well. You could see that our Mumbai grew by 18%. Bangalore, Pune, Surat, all of these cities are doing well for us. So the B2C growth, in the top 12, 10, 12 cities is going to be key. And we keep seeing basically playing a double engine, basically the tier 1, tier 2 cities also grow and tier 3 grows really exponentially. That's going to be the trajectory going forward.
Then with the expansion into new markets, how are you seeing your margin trending? Can we see uptick from here?
Yeah, so see, we have guided this year on 25-26% EBITDA margin. We delivered 25% in quarter 1, and we clearly see that our guidance still hold good for the rest of the year. But when you put new labs and new centers in the new markets, there is a little bit of additional load on the OPEX, and hence there is an erosion of margin by about a percentage for 2 years once we put up labs. So our rapid lab expansion is going to, this year again we'll have about 25 odd labs, and after that we will slow down on the rapid lab expansion. So for the year 26, maybe financial year 26, will have a little bit of stress on margin of maybe 1% because of the rapid expansion, and after that we will be having very regular and normal levels of expenditure, and our margin will further expand from 27 onwards.
Then while we have discussed maintaining margins, what's our revenue outlook for FY25 and how do you expect to split this between volume and price growth?
So we continue to hold the guidance which were given in the beginning of the year, which is 13-15% growth. And see, quarter 1 is normally west and south part of the country is relatively a muted quarter, but going forward, quarter 2 onwards, you will start seeing the opportunity getting better, the revenue performance getting better, and that will also help the overall margin performance. So I continue to believe that the guidance that we are given on revenue, which is 13-15% holds good, and so as the guidance on the EBITDA. Whatever we given at the beginning of the year.
Okay. All right, Mr. Chemmenkotil, we'll leave it at that. Thank you so much for joining us and taking us through the quarter gone by, as well as what we can expect going forward from Metropolis Healthcare.